I think this pullback is a huge buying opportunity for gold, where if we get that $3,500, $3,600 level, I do think we see 5,000 in 2026 as a price target. And then silver longer term, I have the general same view that if the US and the world continues to just print our way out of disasters, of financial kind of mismanagement, then inevitably silver longer term goes up. The only thing with silver, be a little bit more careful because it's more apt to be adjustable to economic factors. We know it's an industrial metal as well. And I do just caution people that the volatility could be much bigger in terms of swings than gold.
Yeah, the whole system goes down. The banks collapse. The central banks collapse. And that would be a great thing.
The current pullback in gold and silver is not the end of their run. It's the setup for the next significant move. Despite short-term weakness, the structural backdrop remains bullish as both metals mirror historical cycles that preceded explosive rallies. Gold's price action today strongly resembles the 1979 setup, where a brief correction followed 9 consecutive weeks of gains before launching into record territory. With support levels forming near $3,500 to $3,600, this phase could mark the final buying opportunity before the next surge toward $5,000 in 2026. Silver's chart tells a similar story, showing technical alignment with long-term trend lines dating back to 2008 and 2011, suggesting a healthy retracement before the next breakout phase. Gareth Soloway, chief market strategist, and Innecco, macroeconomic analyst, both agree that despite volatility, gold and silver remain in the early stages of a generational bull market. The temporary pullback is less about weakness and more about positioning, shaking out weak hands before the next leg higher. With debt levels surging, inflation pressures persisting, and confidence in fiat currencies fading, the path for tangible assets like gold and silver remains structurally higher. Now, we present the clips from their interview. Before we continue to discuss this, please subscribe to our channel and activate the bell icon for timely updates. Thank you, and enjoy the video.
I am still looking for a bigger pullback. It's been a nice pullback thus far, but I'll show this chart here. This is an absolutely remarkable chart, how the similarities with 1979 and the price action. So this is the chart here in 2025, and you can see here's in 1979. And this had this beautiful move up. And over here in 2025, we had this nice move up. In 79, we had this sideways consolidation. We had the sideways consolidation in 2025. And then after that, we had 9 straight up weeks in a row in 1979, which led, look at this, to a big top in gold and a pullback. And what's interesting here is when we pulled back, where did we go? We went back to this general zone right here, which was the previous major high before that consolidation. Well, look over here. In 2025, 9 straight up weeks. So exactly the amount of weeks that we saw in 1979, and we've now started to correct. And really what I'm saying here is that while I think that this time is slightly different, and I'll go over that in a second, do we expect the pullback to take us? Basically back to that former high pivot right here, just like in 1979, we pulled back there. This is where I start loading the boat on gold. Now, quickly, let's talk about why this is different, because I do think it's important to say that, hey, listen, things aren't the same as 1979. For instance, in 1979, Volcker was raising interest rates. We had like 15, 16, 17, 18% interest rates in the US. Here, we're seeing Jerome Powell lower interest rates. Back then, GDP to debt to GDP was 32%. We're now at 130%. The government back in 79, 80, they were more apt to be negotiating and actually maybe not spend so crazy. In 2025, yes, we're in a government shutdown, which I think ends soon, and then the spending will start up again. So while 79 into 80 marked a multi-decade top in gold, I think this pullback is a huge buying opportunity for gold, where if we get that $3,500, $3,600 level, I do think we see 5,000 in 2026 as a price target. I don't see any, we heard about Doge early in the year, about Elon Musk kind of stopping all this spending. That petered out so fast, it's honestly a little laughable. And so the government is going to go back to what it does best, which is, apparently during expansionary periods, spend a ton of money. Now, what happens when the economy slows and they're actually supposed to stimulate? Then they'll probably spend even more. So you have this fiat currency issue with de-dollarization, all these aspects coming in where other countries are now starting starting to question the validity of the U.S. financial system because of the debt, because of the inability of Congress to get spending under control. And that inevitably is going to make this pullback much shorter in duration than what we saw in the 70s, 80s, and even into the 90s before new all-time highs are hit. And the thing is, because a lot of investors piled on at the end of the run, it's going to be painful for a lot of people, and a lot of people may throw in the towel. I call them the weak hands, the people that bought at 4,000 or 45, 4,300, where it was like, oh, gold can never go down, right? And we're now seeing that in the stock market, right? That same mentality just before probably a flush. And so oftentimes at the end of moves, the euphoria sets in, the FOMO sets in, people jump in just thinking, oh, it's the easiest trade in the world, just go long gold. The market has this weird way of flushing those people out, of getting rid of the weak hands, and then the strong survive, right? The strong still hang in there. The strong have been accumulating for years, and then price starts to move back up and hit new all-time highs. When you have vertical moves in silver, gold, or really anything, it just sets up for a natural correction, right? This is going back to the psychology that we've kind of talked about in markets. And it doesn't matter if it's crypto, if it's stocks, if it's commodities, human nature is human nature. We get greedy, and then we get fearful, and then we get greedy again. And it swings like a pendulum back and forth. And what's so cool about this chart on silver is we can look at this. Here's a parallel. So these lines are exactly parallel. The low in 2008, the financial crisis here, that was that low. We connect that low to the low in COVID, the lowest point, and then we simply just take a trend line, a parallel, and drag it up to the high of 2011 and look at where silver stopped going up to a T right at that level. And so this to me as a chart signal allowed me to say, okay, the likelihood is we're going to get a pullback in silver. Now, the bigger question is how much of a pullback, right? And to do that, we need to go into a shorter term time frame. So I'm flipping over from the monthly chart to the daily chart. And what I'm really looking for is you can see this trend line right here, how it connects beautifully right through this area. And so I'm looking for a pullback to about $43, and then I'm going to start to accumulate silver. Now, keep in mind, I'm not going all in at 43 because I always worry that there could be additional downside, but at least that's a point where I can start saying, okay, I feel comfortable about getting in silver. And then silver longer term, I have the general same view that if the US and the world continues to just print our way out of disasters, of financial kind of mismanagement, then inevitably silver longer term goes up. The only thing with silver, be a little bit more careful because it's more apt to be adjustable to economic factors. We know it's an industrial metal as well. And I do just caution people that the volatility could be much bigger in terms of swings than gold. And I think, again, the metals overall have been in slumber for so long that when we get this move to the upside, I believe it's closer to the beginning of the move than the end of the move. It's just people just have to understand that when something goes up, like silver went up from April of $26 to 54, I mean, that historically is one of the biggest near-term moves we've seen in silver and the gold move alike. You're going to have flush-outs. You're going to have retracements. The key is you look to buy key technical levels on those retracements for those next legs to the upside. It was definitely a hawkish cut by Jerome Powell in the latest meeting, but I think part of the market, right? I mean, we did see yields go up. The dollar has rallied. Here's your weekly chart on the dollar. So we really have seen a little bit of a bottom on the dollar form, but notice how it's coming off of this massive decline. In fact, one of the worst periods in the dollar is 2025 until this recent little move to the upside. Now, what's interesting about this, right, is that if we look at this trend line, there's a trend line here on the dollar that actually gave us this low. And look at this. Look at how these lows connect perfectly going back to 2014. You could arguably stretch it out even further than that to the low in 2021. And then this is where we're bouncing now. And so for me, I look at the dollar and I say, unfortunately, there's limited upside here, right? If we look at this zone on this, and let me just grab a tool here so I can draw this in, we can see that this area was support, and I'll show you here. Let me draw on this here. So we came down, we hit it, we hit this line. There was this zone over and over again, and then we broke, and now it's become resistance. And so ultimately, even though the dollar is showing strength right now, I would actually anticipate a rejection of this zone here, and the dollar breaks down significantly with a downside target in the 89s on the DXY. And so I am bearish on the dollar, which again kind of goes to the macro view that while gold could pull back in the near term, it makes sense that if the dollar is going to eventually break lower, gold likely is going higher. And same thing ultimately with Bitcoin. If Bitcoin breaks down, let's say there's a stock market sell, eventually Bitcoin does make new all-time highs down the line.
Gold and silver remain the ultimate forms of financial sovereignty in an age where fiat systems are increasingly weaponized against their own citizens. With governments deep in debt and central banks trapped in endless monetization, physical ownership of tangible assets is becoming a quiet act of resistance. The shift from paper to tangible wealth is not just about preserving purchasing power, it's about maintaining freedom itself. Each ounce of metal held outside the system represents independence from a collapsing monetary order built on credit, manipulation, and control. As fiscal burdens rise, new taxes emerge, and confidence in the currency erodes, elite banking structures seek new ways to maintain power, whether through digital currencies or coercive taxation. Yet history shows that tangible assets outlast every artificial system of control. Gold and silver are not merely investments, they are defenses against the confiscation of liberty and value. Let's get back to the interview.
Hedge fund managers recently said gold is the best money. Well, the dollar is quickly disappearing from like central bank reserves, and gold is taking over, and they're desperate. The American authorities as well, Mr. Bessent as well, the Secretary of the Treasury there, because that means they won't be buying the U.S. debt as much, and rates are going to go up, and the debt is unsustainable. The big, beautiful bill is continuing deficit spending. We're at $38 trillion. Yes, of course, they're trying to push people into cryptocurrencies and Bitcoin and stable coins, but that's a big mistake. Even Bessent said that. Praised Bitcoin the other day. That's because he doesn't want you to buy gold because, it's the best money and it's money, right? That's what JP Morgan once said as well, that gold is money, everything else is credit. So that's what's going on. These bankers are desperate. Their fiat currency system is teetering. And what's, in my opinion, how do I try to fight this? Well, first of all, you need to fight it mentally, in my opinion. You need to keep a clear mind. You need to keep your mental or your philosophical independence. You got to keep believing in the right things, right? That theft is bad, because this is what this is, right? Theft of private property is bad, and unfortunately, our governments have become the biggest thieves out there, unfortunately, and I say that with no problem, really, because governments usually are created by a collective of individuals to try to protect this collective from people who are trying to steal their property or hurt their body, or other collectives who are trying to invade your collective, your country, right, the borders. That's all government is there for. It should be minimal, but now government is spending 50% of what the private sector produces. And if you don't quite understand that, and I understand why you wouldn't, and that's because here in the UK and throughout the West, we've been brainwashed over the decades, over the last century, to think that socialism is a good thing. But they've slowly kind of taken over, the socialists. And believe me, they're still in charge in the U.S. as well. It started really, how can I say, definitively with FDR, when he basically stole Americans' money, private property, i.e. gold. They say it wasn't confiscation, but it was as good as, if you didn't hand in your gold, you had danger of being imprisoned or a fine of $10,000, right? That's when socialism started in the States, and is still there. And the main engines of socialism and fiat currency and communism, it's all the same, is the central bank, right? The central bank controls all the currency issuance. There's no real sound money. And so how do you fight this system? Well, you don't feed the monster that wants to kill you. And what do I mean by that? Well, you don't leave your spare savings in the bank, because it becomes an unsecured loan to the people who are trying to steal from you, the people who want the worst for you and your family, the people who want to keep you down and dependent on the state so that they have a reason to exist, right? And also they want to keep their bosses, the bankers, whole, because that's what it's about. Yes, and the price of gold has been choppy, but do you understand now the importance of having gold and silver, real gold and silver? I don't mean like paper promises. It's more than just safeguarding the purchasing power of your savings. It's about safeguarding your sovereignty. And I can't emphasize how important that is, and how a huge mistake it is to get rid of your physical gold and silver, unless you have an emergency, of course, to put it back in this currency that finances this monstrosity, which is the central banking system that is run by the bankers, and that is disguised as a horrible system by democracy, right? And the fact that we can choose our leaders, well, we don't choose them. They're selected by the bankers for us to choose one of their two picks, right? That's what it's all about. So yes, Rachel Reeves, they're talking about doubling the council tax for houses above the F band. Council tax is like a real estate tax. So yeah, people paying right now $5,000 a year in council tax could be paying $10,000 as of next April, and you can bet they're going to go down the bands eventually, and everyone's going to be paying double the council tax. And why do they need to tax us? Well, because they need to keep the gilt market, which is the engine, the government bond market is the engine of this fiat currency system. If that implodes and if yields go through the roof, yeah, the whole system goes down. The banks collapse, the central banks collapse, and that would be a great thing. But they're extracting the last pound of flesh, so to speak, from you. Who's going to be buying all these assets, because people are going to start selling their homes. They can't afford it. A lot of people who own these expensive homes are in Greater London, southeast of England. A lot of them are like pensioners or seniors who bought those houses at a lot lower price and now are in a fixed income. They're going to be forced to sell. Are young people who are working now, are they going to buy these expensive homes? And even if you have the money, are you going to buy it so you can pay more tax? No. So it's going to end up that Wall Street is going to buy it. People like BlackRock, JP Morgan, Barclays, HSBC. And that's the whole objective. They want to control you. The bankers are monopolists. And it's not just socialism that is throttling the country. It's communism. Socialism, communism are the same. And the reason why things are getting so much more authoritarian is that socialism and communism are not systems that are voluntary, right? And the more desperate they are, the more they're going to crack down on your liberties, on your property, and on everything else. So how do I keep a sane mind? Well, I try to do as much as possible that I can for myself and my family. I can't control a lot of what's going on, but I'm certainly aware of what's going on, and there are ways to fight this. And here on the channel, I've been saying that one of the ways to fight this is not to finance these people, is to have physical gold and silver outside the system. And that's why these people hate gold and silver, of course. And that's why Scott Bessent is pushing Bitcoin. I saw the other day, he's saying Bitcoin is doing great. He doesn't want you to buy the gold and silver, because if you do so and there's a rush for physical, they're finished.
The struggle between real money and the fiat system is reaching its breaking point. What we're witnessing now is not just economic mismanagement, it's the final phase of a century-long experiment in paper promises. The global financial structure, once sustained by trust in government and central banks, is eroding under the weight of its own debt. As the system extracts its last drops of value from the public through taxes, inflation, and devaluation, a silent transfer of power is underway. Those who understand sound money are already positioning themselves outside the system, holding tangible assets that can't be printed, frozen, or controlled. Physical gold and silver represent more than financial safety. They are tools of preservation in a world moving toward digital dependency and centralized authority. The next stage of this monetary transformation won't reward speculation, it will reward preparation. Those who act now, securing what's real before the reset unfolds, will stand on the right side of history when confidence finally breaks. Share your thoughts on their analysis in the comment section below. If you find this video informative, please support and turn on notifications to stay informed about our latest videos. See you in the following video. Thanks for watching.